Hello, my friends, and welcome to Olymptrade. My name is Angie. I am a financial analyst with Olymptrade, and today we are going to speak about fixed time trading. This is part six in a series about fixed time trading, that's FTT. And in the last week, we also had a stream about how to make your trading strategy. And also before that, we also discussed how to start trading on the FTT platform. We discussed money management and we discussed a lot of very important and interesting things. So please make sure to definitely check out the playlist. We have a whole playlist that is dedicated to fixed time trading. You can check it out on our YouTube channel. And I highly advise for you to, if you are joining for the first time, for example, for you to go ahead and check out the previous streams because we discussed a lot of very important topics. Let me go ahead and switch to the platform. And of course, as always, let's go ahead and first check the sound and the picture to make sure that you can hear me and that you can see me well. I always like to ask our dear traders where you are joining us from today, and I also like to ask if you are new. So whichever you choose, please let me know in chat. You can let me know the country that you're joining us from. Please let me know if you're new, or just put a plus sign to make sure that everything is fine with the sound and the picture. Okay, I do advise you guys to join us in chat, ask your questions. My colleague will be helping me out, and of course at the end of the stream I'll check back with you in chat as well. Sunny Wayne, hello Angie, happy to see you. I'm happy to see you as well. Arvind Patel, hello madam, hello. Rahan Patil, hello ma'am, love from India, hello. LD Clips, hello traders, how was your profits? Chitan is from India. Your audio is a little bit low. Let me just maybe fix my microphone a little bit. Okay, Patrick is from Kenya. Mohammed is from the United Arab Emirates. Anurag, hello. Sorry I'm late. You're not late. We're just starting. So welcome, welcome. Imitiage Jordair. Hello, I'm well. Thank you so much. How are you? Sound is perfect, Edwin is saying. And once again, my friends, oh, hello, Sunny from Sri Lanka. How wonderful. And Mohammed is from Egypt. We have so many different traders joining from so many different places. It's really, really exciting to see all of you, my friends. Well, I'll go ahead and start with my favorites. I'm going to go ahead and give you the promo code. You have it displayed right above my picture right now. The promo code is SAFE and then the number 36. This will add plus 30% to your deposit. And this promo code will work until next Monday, which is going to be May the 25th. So once again, the promo code for this week is SAFE and then the number 36 plus 30% to your deposit, which works, the promo code works until next Monday, May the 25th. And of course, as always, for our newcomers, for people who are joining us for the first time, make sure that you are subscribed to our YouTube channel. Give this video a thumbs up. Show me your support. Let me know that you enjoyed the video. And of course, don't forget to ring the bell so that you get our notifications. For example, you'll get reminders whenever we're starting our streams and so forth. And another thing that I want to mention, and I'll also show you this at the end of the stream, please make sure to keep track of our YouTube community. Whenever you come to the YouTube channel, you'll have different sections on like videos and playlists. There's also a section called the community. And we also release a lot of important information there, and we also release weekly. We have weekly releases on different assets and also their price targets. So make sure to check it out. And so we're going to go ahead and start with our presentation for today. Once again, so today we're going to, this is part 6 in a series of 8 videos on fixed time trading. And today we're going to move to an advanced level and analyze trading signals. So, if, as you may recall, last week we spoke about an important part of our trading, which is called the trading algorithm. And the trading algorithm is basically these are certain steps that we have to follow and watch for before we open our trade. Whenever we're analyzing a trading algorithm that will suit us best, we first analyze it. Then we simulate the trading algorithm on a demo account. Then once we are comfortable, we switch to a real account and try the algorithm out with small amount trades, and then gradually build up the amount according to our money management plan. We also spoke about money management during our previous stream. So once again, please make sure and don't forget to check it out because it is very importante. Alrighty, so the next thing, also this is from our previous stream. This is basically like the steps, and with our example, our trading algorithm can be something like this. First, we have the price breaks the trend line. Then the price moves above or below the moving average, depending on what's going on the market and the chosen asset, of course. And then, of course, like as the third step can be the faster moving average crosses the slower moving average, either up or down. Once again, depending on what's going on the market. And then once all these steps are complete is when we enter a trade. We do have to take note that if you are trading an algorithm that has three steps that have to happen before we open our trade, before we enter our trade, then we have to stick to our plan and wait for the completion of all three steps before we open our trade. So don't forget about this part because it's very important for us to follow our plan. Alrighty, and the next thing, let's go ahead and move on. So now, when we are analyzing the market, let's also not forget that we first have to identify the signal type. For example, is there a trend on the market, like a strong price movement? Or is there a counter trend on the market where the price is, for the most part, kind of moving sideways, like resting before the next move? And also we'll also discuss like which confirmation signals do we use when we are analyzing the market. For example, we can use levels of support and resistance. We can use additional indicators, and there are a lot of different ones. There are trend indicators, there are oscillators, there are also psychological indicators. Of course, we have to analyze the stage of the market. Is it trending or is it flat? We also have to pay attention to candlestick formations. And then I also want to speak to you a little bit about triple screen trading system by Alexander Elder. So let's discuss all of these parts a little bit more in detail. Levels of support and resistance, and I think this was probably in one of our like beginning streams. I think it was the second stream, if I'm not mistaken. And support and resistance are very important to use and to understand. Levels of support and resistance are crucial for finding entry points, also for finding points of reversals, and also breakouts for further price movement. Basically, as we can see in our example, a break of support or resistance, in this case of resistance, a break of a support or resistance level is a strong signal that the price will continue movement in the direction of the breakthrough. So once again, I know I repeat this a lot of times, but we have certain streams and webinars and videos that are dedicated to certain topics. So definitely don't forget to watch our previous streams so that you can catch up. And because this is basically like a recap of our previous streams. But don't forget the levels of support and resistance are very, very important to understand. Excuse me. Now, for example, also our previous example is where there is a breakout. So a breakout of resistance to the upside. As you can see, the price came back, touched that same level as support, and then continued further movement up. Our next example is basically like a levels of support and resistance when we are working with a counter trend. Like as I mentioned also, imagine we have a price movement. So the price moves, for example, down, then it retraces a little bit by a third or a half of the previous price move, and then moves again with the direction of the trend. These retracements, these corrections are also sometimes called counter trends. It's like the price moves down and then it rests, it consolidates, and then it moves down again. So whenever we are working with a counter trend, the price is likely to move within a channel. So it is resting before further price movement. So we look for bounces from our resistance, which is on top, and we look for bounces from support, which is on the bottom. Now, additional indicators that are always here to help, and there are a wide variety to choose from, and I would like to suggest that you take it one step at a time and you learn each indicator separately, so one at a time. This way you will understand the indicator and how to use it properly, and then you can decide for yourself which combination works best for you. Now, there are indicators that are best suited for example, like trending markets, and some indicators work better during a counter trend or a flat. And there are also some psychological indicators. Now, if so, we have our main algorithm, like we've seen in our previous example, where the price breaks the trend line, then moves above or below the moving average, and then the moving average is crossed. For example, this is just an example. We can also look at some additional signals and additional indicators to give a confirmation. So if additional indicators give the same signal as our main trading algorithm, the signal is then strengthened, which is, logical. The additional indicator may not give any signal, which is kind of like a neutral situation. Or in some cases, additional indicators may actually give the opposite signal, which is going to weaken the main trading algorithm. So you have to take note of this. There can be three scenarios. So you have to understand that they're possible and be ready for them, and to really make a decision depending on what's going on the market. Also, there are different indicators that work better on different stages of the market. Like, for example, to get a confirmation of your signal when there's a trending market, when there's a strong price movement, trend indicators, for example, that you can use is the simple moving average, the exponential moving average. Also, for example, the parabolic SAR is a trend indicator, the MACD, Bollinger Bands, the Ichimoku Cloud, Alligator, and also Heikin Ashi. Now, Heikin Ashi you will find in the graph type, not in the indicators. It's going to change the way your graph is displayed, but it's not an indicator. Oh, excuse me, it's not really a graph type. It's more of an indicator because it smooths out the price movement. And also there are counter trend indicators that can give us better signals or confirmation signals, and these are basically like oscillators. For example, the RSI, the stochastic, and also the MACD. Now, another thing that I would like to mention is that there are some psychological indicators. For example, the sentiment that you can find in the indicators section. The sentiment basically shows us the percentage of traders on the Olymtrade platform that are trading the current asset. And the indicator shows us the percentage of traders that are trading bullish on price increase and traders that are trading bearish on price decrease. You can use this Well, you can use this in two ways. You can either you can trade with the crowd, with the majority of the traders in the direction of the trades, or if your indicators are showing something different, or if you have some other information that maybe the other traders are not taking into consideration, you can actually trade against the crowd and against the market. So once again, it really just depends on what's going on in the market and with the specific asset. Just remember that this tool is available for you to use when you are trading. Now, another suggestion is to use the moving average. I don't think I ever have a chart in front of me that without a moving average. Actually, I use 3 all the time. And we can use the moving average in certain ways. We can use the moving average to determine this stage on the market. For example, we can use the EMA, which is the exponential moving average, with a period of 21. If the moving average is intersecting the price movement, as we can see in our example right here, so basically like a counter trend, as you can see the price is moving sideways, and you can see that the moving average is between, it's like the price movement is moving like inside of the moving average. This means that there is a flat on the market. Once again, the market is moving sideways, there's indecision, there's no trend on the market. And also, the moving average can help us to determine the strength on the market. Like the sharper the angle of the moving average, meaning if it is sharply angled down or it is sharply angled up, then the stronger the trend. Also, the further the moving average is from the price movement, this also means the stronger the trend. You see, we have to remember that during a trend, like during a movement on the market, the price will move in the direction of the trend. And during a retracement or a correction or counter trend, the price will periodically gravitate back towards the moving average before resuming the movement in the direction of the trend. So once again, so don't forget, the sharper the angle of the moving average, the stronger the trend, and also the further the moving average is away from the price movement, also indicates that there is a strong trend on the market. Now, a few general rules that help us analyze the stage of the market. If there is a trend in the market, then trades in the direction of the trend are more probable, rather than trades in the opposite direction. Or also in counter trends. So if we have a downtrend, then trades to the downside are going to be more probable than trades to the upside, even if there is a counter trend or a correction or a reversal. There are definitely trading opportunities, but you have to be careful, and you do want to trade mainly in the direction of the global long-term trade. Also, the stronger and longer the trend, the more likely that a reversal is upcoming. So you have to understand that it's not going to be well, for the most part, when we're trading, there's for most of the assets, well, not like stocks. For example, Apple is mostly always going up, because whenever we invest in stocks, we basically buy and hold for the long term. I mean, with that objective in our mind, but like different currency pairs and other different assets, they're going to fluctuate. We're not going to have an uptrend forever. It's going to meet some level of resistance, and then we'll have a downtrend. That downtrend is going to meet some level of support, and it's going to start an uptrend or a consolidation for some time. So we have to remember that the longer the trend is in motion, the more likely that a reversal is upcoming. Also remember, and I do like I like consolidations. The longer the consolidation, like a flat, the more that the price is moving sideways with no trend, the more likely that a new strong trend will start, because the price is not going to move sideways forever. Eventually, the price will either break out breakout of resistance to the upside or breakout of support to the downside. So I do like to watch our flats and our consolidations, because when you find that, of course you have to analyze and watch the market, but when you get in on that breakout, is good money, honey. So once again, the longer the consolidation, the more likely that a new strong trend will start. Now, I do want to speak to you a little bit about candle formations, like candlestick formations. We should most definitely use candle formations as an additional signal. But we have to keep in mind that candle formations, they give us a relatively weak signal to clarify the trading signal. This means that we should definitely know and recognize different candle formations. We do have to know them and recognize them visually on our chart. But try not to rely on candle formations for a sole signal confirmation. It should be accompanied by other indicators and confirmation signals. And also, as an example, for example, if we are working with a trend, some trend continuation formations are, for example, the three black crows. Also, that's to the downside, or three white soldiers, and that's to the upside. And of course, there are a lot of different candlestick formations. Trend reversals, whenever there is an end in trend. I'm going to check back in chat in just a minute. I do see some smiley faces. For example, whenever we have a change in trend and a trend reversal, we want to look for some candle formations such as the bearish or bullish engulfing, or basically like the pin bar formations and evening and morning star, evening stars to the downside, morning stars to the upside. And once again, there are also several other candle formations for that as well. And now, an interesting topic that I would like to discuss with you. Let's talk about the triple screen trading system by Alexander Elder. This triple screen trading system, it helps us to reveal the long term, the midterm, and the short term trend. It also helps us to identify market entry points. And basically, our entry points, our trades, should be in the direction of the long-term trade. Like not too long ago, we just discussed this. And basically, what happens is that we are analyzing our chart, the asset that we're trading, and we're analyzing it on 3 different time frames. When we are selecting the time frames, Alexander Elder advises to follow the rule of 5. So basically, you choose your working time frame on which you're going to trade. To get the first screen, you are going to multiply the working time frame by 5. To get the third screen, you want to divide the working time frame by 5 as well. As an example, if your working time frame is 1 hour, then the long-term trend will be 4 hours, and the short-term trend is going to be 15 minutes. If you are, for example, working with a 5-minute time frame, then your long-term trend is going to be 30 minutes, and your short-term trend is going to be 1 minute. Let me go ahead and show you a few examples. So our first screen shows us the global long-term trend. And in this example, it is the 1 hour time frame. Our second screen in our example is going to be the 15-minute time frame, which is going to help us better see the movement inside the global long-term trend. Also, for example, on this stage, oscillators can help us here. As you can see in our example, we can see that the price is deeply overbought. I'm not going to move my cursor down because I'm going to have that thing fly up. But as you can see, the oscillator is showing us that the asset was deeply overbought, and we can expect a move to the downside. And then our last one, the third screen, is going to help us identify the exact entry point on a shorter time frame. In this example, it would be the 5-minute time frame. And we can look for basically like a bounce from our level of resistance or support. And since our example shows us a downtrend, we'll look for a bounce from a level of resistance. Now, my friends, I do want to basically do a little quick recap. My friends, it is important to have a trading strategy, which is a combination of psychology, money management, and a trading algorithm. We discussed this during our previous stream. And when you are analyzing the market, it's important to understand the different signals and also their strength. We must have discipline and we have to follow certain steps before we open our trades. I certainly hope that you use this information to your advantage, and I hope that you have many, many profitable trades. And now I think it's time to find our random comment winner and give out a risk-free trade, my friends. What do you think? Before we get started, my friends, one more time, I'm going to tell you the promo code, which you can see right above my head right now. It is SAFE and then the number 36. This is going to add plus 30% to your deposit. This promo code works until next Monday, which is May the 25th. And also, if you are new, if you are joining us for the first time today, go ahead and click on the red subscribe button. Give me a thumbs up, show me your support, let me know that you enjoyed this stream. And of course, ring the bell so that you don't miss out on any important and new notifications. And now let's go ahead and go here. Just very quickly, let me go ahead and show you right here. The community that I was telling you about earlier. Basically, we share a lot of information. If you just basically go to our homepage, our YouTube channel, you can see these little tabs on top. There's the homepage, the video, playlist, and then there's community. If you click on community, this is basically like the community of our YouTube channel, and we share a lot of interesting information here. And I just wanted to show you that we are now also sharing a weekly release on different assets and their price targets. And now, my friends, so this is our video from last week, last Thursday, I do believe. We spoke about Forex. It was our fifth step, so this Thursday is going to be our sixth step, which on Thursday, when we continue speaking about Forex, we're going to start discussing the different trading styles. The day trading, swing trading, position trading is going to be super awesome. So don't forget to check it out on Thursday. So last Thursday, I asked you guys to leave comments below this video. As you can see, all of these comments. And don't forget to include your account ID number so I know who to assign the risk-free trade to. I'm just going to basically take this link. I'm going to copy this link, and I'm going to use this website. It's called Raffle Dash. It's basically just a website that helps to randomly pick our winners between our comments. Alrighty, so I'm going to go ahead and paste our link. And if you are ready, we're going to go ahead and choose our winner. Alrighty, our winner for today is going to be Idhaya Vanan. It's awesome, my ID number, and my biggest congratulations to Idhaya. Idhaya, if you are new in chat, if you are new in chat, if you are here, please let us know in chat. Our biggest congratulations to you. Woohoo! A risk-free trade for Idhaya Vanan. Once again, congratulations, congratulations. And once again, my friends, let me go ahead and check in chat to see how everything is doing. Jafar is saying Forex or FTT, which is safer. This is, it really, I would say that you should probably use both, and that you should learn to use both of the trading instruments, because it's a little bit different, and we have a stream where we explain the difference. With Forex, your profit depends on by how far the price moves in the direction of your trend. And with the fixed time trading, we have to predict if the price will be either higher or lower than the current price after a certain period of time, which is called the trade duration time. And my friends, it really just depends on your trading style. It just really depends. Uh, uh, there's no concrete answer which is safer or which is better. You are looking cute as ever, Jerry. Oh, thank you so much. Oh, Aji Haya Vanan is here. Thank you, Angie, for your work. Congratulations. Thank you so much for joining today. All right, so that is it for the risk-free trades for today. Make sure you join me on Thursday. And on Thursday, leave your comments below that video. And then next week, we'll continue with our risk-free trades. My friends, thank you so much for joining today. It was very, very exciting to see everyone. I love seeing everyone here. And please make sure to join me on Thursday, 1 o'clock, 1 p.m. GMT plus 3. I hope to see you all there. Thank you so much for joining. Give this video a thumbs up, subscribe, and I will see you guys next time.